Hello and welcome to another Switzer CEO Masterclass, and today I'm talking to Danny Nadri, who is the Country Manager for Shekel Brainweigh here in Australia.
Thank you. Pleasure to be with you, Peter.
Okay, the company's name is so interesting. Shekel Brainweigh, of course. Tell us the origin of the name.
We didn't plan the question, so I'm so happy you actually asked it because I get it a lot. So the name shekel is from the biblical word to weigh or a weighing measurement. And the company actually preceded the currency. So the company exists 50 years and we first call it shekel. And at the time, the Israeli currency was actually lira. The company was actually ahead of the currency, and then the government changed the currency name from lira to shekel. We just, stay with our own name. But the name comes from the biblical word of to weigh or a weighing measurement, and the company name actually preceded the currency in Israel.
Yeah. So Brainweigh, tell us what the company does.
So look, Shekel is quite a mature company, and for decades it developed sensors which are called load cells, and they're basically patented sensors that allow us to weigh stuff digitally. And Shekel did it pretty much as a leading provider in the world, both in terms of speed and accuracy, which allowed us to provide a very accurate and fast product. The Brainweigh part comes from 4 years ago when the company realized that by adding artificial intelligence capability to these sensors and create an integrated technology, which is really a new enabling technology, we took artificial intelligence and advanced mathematics and basically created added a brain to the ability to weigh stuff. With effectively creating a talking shelf, if you will, or a talking surface. So we're able to look at any surface today and understand anything that moves on this surface in a very cost-effective manner. So the Brainweigh is actually the artificial intelligence, machine learning, and our ability to artificially divide the shelf into a grid with a very high resolution.
Okay, Danny, give us a classic example of a business that might use your services.
Retail. So today, the main application for this is retailers. And what happened in many parts of retailer is the need for automation. What we saw in the last 10 years is that retailers invest in self-checkout, in the ability to understand products on shelf much better. And we add a component that allows them to do this much better. So if we could tell retailers anything that moves in and out of shelves in real time, that allows them a lot of value in terms of inventory management on the shelves, understanding how consumer engage with products on the shelf. And that's inventory, both in overstocking and understocking. The other things that it does is helping with shrinkage, the ability to actually understand which product moved off the shelf but never went through a point of sale. And on top of it, it allows us a building block that allowed us to offer a smart fridge. And the smart fridge is really the first product that we started commercializing with this technology. Basically a fridge that allows you to come to something that looks like a vending, present a payment system like a credit card or a debit card, a fridge door opens, and you can take products from shelves rather than them falling from a vending system. And that really opened a whole new horizon of putting very new products in vending type solutions, micro markets, or anything from dairy products to salads to healthy food. And that's the first engagement that we saw in the market. Have now about 150 of these machines in Israel. Have our first system in Sydney and in a few other places around the world. And a second generation that is now in Belgium, 67 machines as an order in Belgium only in the last 3 months.
And how does the weighing function give the information?
So it's a bit complex, but think of a sensor that I position in 4 edges of a shelf. And this is, by the way, how one of the sensor looks like. It seems very simple, but it's actually made out of complex metals, and also the type of it and the shape of it will determine how accurate it performs. But once I take all this information, a lot of reading from these sensors, and I apply artificial intelligence to it, I can artificially divide this shelf into a grid of 1 square centimeter each. Each of these square centimeter know the weight in roughly 1 gram resolution. If I would have to do it with hardware on a normal shelf of a supermarket, let's say 1 meter by 40 centimeters, I would need 4,000 little scales. We do it with 4 sensors and advanced artificial intelligence and some strong mathematics, which makes it very cost effective.
It's very, very interesting. Danny, why are you listed on the Australian stock market?
The listing happened about 3 years ago, and granted, I mean, there's Israeli companies, about 8,000 Israeli companies which are on the tech space. I think it's growing almost daily, and different companies decides to fund themselves through venture capital, through recently with the Israeli Stock Exchange. Some which are large, we do it at NASDAQ. When we looked at the possibilities to fund the business, either through VCs or in the public space, the idea was that because we operate with very large clients like Toshiba and GE, and we're going to target very large retailers, being on the public space was a good decision, was the right way to look at it. And we looked at different exchanges. NASDAQ was way too big for a company the size of Shekel, and the ASX was the one that showed the bigger interest from investors here. Looking at the last 3 years, maybe it's definitely not where we want it to be in terms of pricing of the share.
Yeah, but I guess it's fair to say, I was looking at the share price. I think you were 32 cents in September 20. That was after the crash of the market. December 21, you were 24 cents. You're now 16. But you are a tech company, and tech companies have really copped it, whether they are performing well or not.
I guess that's something we'll need to learn. The market behavior towards tech company, and granted, not in any negative manner, so to speak, but when we look at tech venture in Israel or in the US, they mostly grow through just pouring more investment into the growth engine of the venture, and not necessarily go into profitability. And they will suffer this volatility in the activities that follow, if you will, in terms of their share price. Now, most of the tech venture that we see are not funded in the public market. So you don't wake up every day and you see the share price of the business. And VCs would be more engaged with the daily operation or the board. Here we see it, very visible every day. That's the share price of the company.
Yeah.
But it does impact the way we raise capital. It does impact our ability to raise capital here.
Okay, well, tell us about the profitability of the company. Where are you at in terms of profitability?
We get to a bit of that needs to be explained. There's the scale business, which is the main part of the business today that brings revenue, and at the 2021 with a revenue of about 21.7 million US, a bit north of 30 million Aussie, profitable at about 1.5 to 2 million US a year, consistently in the last few years, and that's a profitable business. They're a business that deliver project and products across the world to very large clients, and is always profitable. The other part is the venture, which has grown from roughly $300,000 in sales in 2020 during COVID to I think short of $1 million US on 2021, growing exponentially, but still requires quite a lot of funding, as every venture will be. And the bottom line is that the scale business, which is the profitable business, continue to fund the venture while we use additional funds. So there's no strategy that says make the venture profitable tomorrow. It makes no sense to have a tech venture and make it profitable at $2 million revenue, just because you will grow then in the pace of your profit. You'll make $300,000 profit, and that's how you're going to grow. What we normally see at venture is the need to continue inject go-to-market activities, commercializing activity, and want to push the venture as hard as you can, knowing that you're investing in creating a much larger growth, and the profitability will come a bit later.
Yeah, the opportunities going forward. What are the standout opportunities that you see?
The first is to grow the existing business. What we've seen is a business that grew from roughly, I think, 17 million US to 21.7 this year. We see a continued growth from new clients, predominantly in Europe, but not only. And that business is likely to continue to grow pretty much in the same pace. We grew 23% on this portion of the business last year. And what we see on the venture is exponential growth. We see the business growing from $300,000 in 2020 to close to $1 million US this year. And what we see in front of us is opportunities which are very significant in terms of the venture ability to grow. Just to mention, we just opened a new autonomous store in the US for the first time 3 weeks ago with Nourish and Bloom. We're very happy about this project because they look at least formally, they say, a few tens or hundreds of stores in the United States. And we see the same need in Asia. We see the first 2 stores that we open in Paris. There's a store that's going to open in Israel in this quarter. So across the board, the venture sees very strong opportunities in front of it. I think it's going to show already in Q1 again. And that's what we anticipate for the venture to do, to continue and grow.
And Danny, looking at the nature of your business, and given the fact that you said retail is particularly important, are you going to be advantaged by a world getting back to normal, shoppers going back to shops and getting out there rather than living in a lockdown world where they still are buying online, but they're not going into the retail outlets that might be using your technology?
Look, obviously humanity and the retail space have gone through transformation through COVID, but this is not a transformation that we haven't seen before. The trend of the retailers to go with a lot more automation has started 10 years ago when they realized that they have to go from very big stores into smaller and smaller stores, where the consumer is engaging with the product almost wherever it wants. And you need to be a lot more accurate in what you put in these stores, and you need to be a lot more efficient in how you man them. How many people can you actually put in every store? So the trend to go automation, to do automation in retail has been before. COVID simply accelerated it. Now, obviously, we need people to interact with products, not just online. This is a physical, if you will. So putting a smart fridges, which has a healthy food, in different locations in the city, absolutely help. If you do an autonomous store where people do not need to stand in line, they just go into a space, take whatever products they want, confirm the transaction and leave, that's the trend that is going to dominate the retail world going forward. So we think we are right on the money, if you will, on where the retail is going, and we're bringing an enabling technology to actually make it happen. But absolutely, the world coming back from COVID into a more normal operation helps this happen.
Yeah. Finally, is there a better question I should have asked you to this point? And if so, what is that question and what is the answer?
Look, I think that Shekel is a global company. We'll continue to do work globally in terms of our clients and markets and what we serve. In terms of the presence on the ASX, I think the bigger question for us, the things that we've dealt with in the last 2 years, is why is the business traded in these values, which is less than one-time revenue even, and why people maybe not find the strength behind the company. Intel, which is a tech behemoth, awarded us 4 Gold Partner Awards only in the last 2 years, looking at the business and see the strength of the technology. And we started commercializing in any other categories, or the way the management looks at it, the business should be traded and valued in much different numbers than we see today. And we're not there yet. So we, I guess, have to continue tell the story to people, convince them that what we do is on a very different scale than what they see today, and seeing the opportunities to continue fund the business in Australia, and not just in Israel as we've seen last year, or predominantly from Israel as we've seen last year, or from the US.
Brian, thanks for joining us.
Thank you so much, Peter, and the time.
And that was Danny Nadri, who's the Country Manager of Shekel Brainweigh here in Australia. Thanks for joining us. And remember, this is an education video aimed to give you insights into a company listed on the Australian stock market.